Welcome to the Commercial Real Estate Academy podcast, the podcast dedicated to simplifying the commercial real estate industry for the masses. Each week, we sit down with industry experts to dissect the many facets of commercial real estate and extract valuable lessons you can apply to your business. Whether you're a new or seasoned business owner or investor, the Commercial Real Estate Academy podcast will be your go-to resource for all your commercial real estate needs. Now, here are your hosts, Raphael Collazo and Jeff Walston.
Welcome to the Commercial Real Estate Academy podcast. I'm your host, Raphael Collazo, here with my co-host, Jeff Walston. How's it going, my friend?
It's going great. Latter part of the week, business is good. Everything's going well. What about you, Raphael? How's it going over there?
Good, man. Good. Got a good little workout in this morning, which is always nice. It definitely helps get the day going. I definitely notice when I don't get a workout in, I am not as on point as I hope to be. And so, it's definitely one of those things that, I've been doing for a very long time, and it's an integral part of my morning routine. I'm sure, in your case too, with what you do on a day-to-day basis, it's good to get out there and get the sweat going a little bit. So, but outside of that, one thing I wanted to share today was really just a phenomenal interview with, someone we've reached out to via LinkedIn, and he's just an awesome individual. His name's Gary Brandeis. He's a managing partner for Real Estate Capital Management Group. Just an interesting conversation on a topic that we haven't really touched on too much on the podcast, and that's the hospitality space. So, obviously he does other investment types. He invests in other property types, but one of the focal points of this podcast episode was the hospitality space and especially the hotel space. And so we talked a little bit about his background. He comes from an accounting background, worked at some large corporations before jumping out on his own and starting an investment company for his own. So we talked a little bit about the process of him learning the tricks of the trade up until he decided to take that leap of faith into an entrepreneurial endeavor. We talked a little bit about the pros and cons of the hospitality space. He has an investment strategy where he invests in hotels in college markets, and he elaborated on why that was the case for him. And then he also talked a little bit about, the different hotel models, whether they're, in travel destinations or whatever else. And he kind of projected about when they're going to be getting back to somewhat normal in a post-COVID environment. And ultimately he did identify that during COVID, they were hit pretty hard, especially early on, but, they've been able to bounce back pretty strong, and, they're in growth mode, and their goal is to, 3 to 4x their portfolio within the next 5 to 10 years. And then we also talked a little bit about the blockchain technology, particularly tokenization, and how it's going to open up commercial real estate as far as the liquidity of it is concerned. So those individuals who want to invest in commercial real estate that may not have the exorbitant amount of money that a lot of times it takes to invest in commercial real estate will now have access to, purchasing tokens or securitizing, I should say, of commercial real estate on a secondary market. And then it just makes it available to a broader base of people, thus increasing the liquidity of the commercial real estate market. And then finally, he's an educator. He does guest teaching at a variety of different universities. And so he shared some advice that he would share with his younger self pertaining to, taking on a commercial real estate career and then prospering long-term. So I thought it was a very valuable conversation. I really enjoyed our conversation with Gary, and I think you guys are going to gain a lot of value from it. So Jeff, do you have anything you'd like to add?
Gary, from my takeaway, he's a very, very giving and teaching personality type. So I know that all your listeners and viewers out there, for watching us on YouTube or listening to it on the podcast, either way, you're going to gain a lot of value from this episode. So I'm excited for you guys to take a listen. And I want to also say we appreciate all the 5-star reviews that you've been giving us. If you are listening to this and you haven't given us a review, please give us a review. In the podcast form or on YouTube. That would greatly help us out, and we really appreciate it. So
definitely. No, I couldn't agree more. So if you guys don't mind taking a few seconds right now, going to Apple Podcasts and just dropping a 5-star review. We have seen a significant uptick of our downloads as a result of you guys engaging with the podcast. So we would greatly appreciate that. So now, without further ado, let's go ahead and dive right into the podcast. Well, good morning, Gary. Great to see you this fine morning.
Good morning. Thanks for having me.
Yeah, we appreciate you coming on for sure.
For sure. Yeah, I know. And Gary, you're tuning in. I see Penn State in the back over there. It looks like you went to Penn State. Where are you tuning in from?
I did. I'm not bashful about that either. So I have a couple things in my office. So I'm calling in from Ardmore, Pennsylvania, which is sort of due west of the city of Philadelphia.
That's awesome. Yeah, we're in Louisville, and I went to Arizona State, so a little bit outside of where I went to school. But it's always cool. I have to make it out to Pennsylvania at some time. We met a lot through this podcast. We met a lot of people actually in Pennsylvania, and so it's definitely a state we'd love to go check out. But again, we just want to thank you so much for taking the time out of your busy schedule. I know you're extremely busy individual, so we do definitely want to honor your time. And one thing I wanted to kind of talk about, and this is something we usually ask our guests when we first get started, is if you could tell us a little bit about yourself, give us a little backstory on who you are and what you do.
Sure. So my name's Gary Brandeis. I've been a real estate developer and investor for, about 35 years now. I graduated from college in the late 80s and started out as a CPA. Accounting degree from Penn State University, took the CPA exam. They threw me into the real estate department at Price Waterhouse where I worked, not because I asked to be there, but I guess they needed a body. So I got into the business that way as an accountant, auditor, tax preparer. And then as I dug into the industry a little bit, I really wanted to become, an investor, developer, and I wanted to get away from public accounting. So I went to work for a large real estate development company based in Texas called Lincoln Property Company. You may have heard of them. Offices all over the country, and frankly, I think they have offices in Europe as well. And I started out as a controller doing property management accounting, construction accounting, and I really started from the ground up, and which I think really helped me in my career to get to where I am today, because I had a really great foundation in accounting, real estate, and I did a lot of the nuts and bolts work for a lot of years before I got into let's say higher level work of acquisitions, finance, development. Started this company about 15 years ago, and I think if I didn't have that sort of core basis of knowledge, I don't think we could have done the things we're doing today.
Yeah, that's amazing. And I think that, obviously since you were in the back end accounting side, you got a probably pretty good understanding of the inner workings of what it takes to complete a real estate project. So that's probably served you extremely well over your life and your career.
It really has. I talk to a lot of young people today, and you ask them what they want to do when they graduate from college, and I want to work at this $3 billion hedge fund and do deal acquisitions. And I'm like, wow, that's I think it would be a good idea if you got some experience first, maybe run a shopping center, be an appraiser, get some fundamental knowledge. And I think that's something that I taught when I talk to young people, and I teach some classes at college, and so I try to push that narrative of this is a great business. You can have an amazing long career, and eventually you'll get to those things. But you really have to build your base of knowledge, your networking from the ground up, and hopefully people are doing that today.
Oh, for sure. Yeah. And that's a big reason why we decided to do what we're doing as far as the podcast is concerned, is trying to bring together the minds of people all across the country that have this experience to be able to provide some insights to people pertaining to, the commercial real estate industry. And hopefully it becomes a resource for a lot of people out there. And we've already seen a significant uptick in our downloads as a result of us, continuing to engage with the audience. So that's awesome.
Yeah. And I think what I would stress is that, real estate's not a real it's not rocket science, right? None of us are in this business because we have PhDs in, aerospace engineering. We're in this business because it's interesting, it's challenging. You've got to be detail oriented. But the reason I'm in this business was we get to do a lot of different things, right? We're numbers guys. We're calculating valuations and financing properties. But then we have to be skilled in the physical side of our building, right? We have to understand, when we look at a physical asset, where's the risk? Where's the upside? Where can I make improvements? What are the downside risks? We have to understand title and roofing and mechanical equipment. So that's what's really great about our industry. And if you can do those things together, boy, you really have a great set of skills to be successful in commercial real estate.
Awesome insights.
Yeah.
Great. When I was listening to you, what stuck out to me is you're going from the accounting and then you wanted to become an investor side of it. What was the draw there? What brought you from the accounting side to the investing side, and particularly in the commercial field? Can you elaborate on that?
Yeah. I mean, I started out as an accountant. So I was working in an office, and, there were my boss and his colleagues were putting deals together. They were financing them. They were getting pieces of the deal. So they were an owner in the deal as well. And there was I sort of at the bottom of the totem pole, making sure the accounting entries were done right. We could issue financial statements. But that gave me such a great base of knowledge. And frankly, I still do that today. We're still during journal entries and keeping our accounting and records and issuing financial statements, things like that. But I think what really grabbed me was the financial side of the business and the physical side of the business. And that's really what grabbed me. I learned two things early in my real estate career. The first one was never buy real estate from people that are smarter than you. Number one. And number two, never get too far away from the real estate. So for example, there's a lot of people in our business that, and I'm not downplaying that part of the business because there's a place for it. But when you look at, one of the big investment banks that has a $16 billion real estate investment fund, their investment strategies are much different than mine. When I have a $50 million investment fund, I'm actually buying properties, developing them, redeveloping them, dealing with contractors and tenants or hotel guests or whatever we're doing. When you have $16 billion to invest, you're buying companies. You're buying, you're not buying individual assets. So when my mentor early in my career said, never get too far away from the real estate, I think he was telling me to try to stay close to the real estate, because that's one of the best parts of the industry. And if I become what he calls a spreadsheet investor, and I sit in my office and I analyze numbers and I look at Google Maps and things like that, but I never get to the property, I never talk to my customers, I never get to see the physical building, I never get to look at my competitors, then I'm really losing 50% of the value of what we do as real estate owners and investors. So I've tried to keep those two things in the back of my mind as I've gone through my career. The first one was, if we're looking to acquire office assets in a certain market, and let's say a big, a publicly traded REIT is selling assets, most likely they're going to know a lot more about what's happening in the market and why they're selling assets than a smaller company like ours. So that's sort of a concept where if they're selling, we're probably not a buyer. Most of the deals that we do, when we make investments and buy assets, they're typically off-market transactions, or we're buying from a bank, a corporation, maybe a family partnership, or there's some situation that's going on where, there's a reason why somebody's selling an asset. And a lot of times when we're buying from what we call less sophisticated owners, there's typically upside opportunities in those assets. So even though we're a small entrepreneurial, vertically integrated real estate company, we act more like institutional investors. So that's sort of we sort of buy in the middle, but we operate as an institution.
That's awesome. Yeah. And obviously, like you mentioned, it's all based on what the asset itself, the value of the asset itself. And so obviously reviewing that and understanding what the dynamics are at play can really add some value to the ultimate goal, which is making money for yourself and investors as well. So
yeah, I mean, if we're not buying for our company, we're not buying, 100% occupied office building, where we just come in and collect the rents and pay the bills. There's no value for us to create for investors. So we're looking for upside opportunities, value opportunities. We do ground up development, ground up construction if we can find those opportunities as well. So that's what we're looking for. We're not what we call a core investor. We're not buying net leased assets to Amazon or some big company.
Definitely. No, for sure. So one thing I wanted to ask you about, and this is something that, I've gotten a lot of questions about from a variety of different people, including the people in our audience, is related to hospitality. And I know you obviously are involved in that space. So I kind of wanted to get your take on, the pros and cons of the space itself. And obviously through COVID, people have been kind of harping on the hospitality space, but I'm somewhat bullish on it. I'm sure you are as well, but I kind of wanted to get your take on, what you think the pros and cons of the space are.
Sure. So a couple of things. One, of the 5 commercial asset classes, hospitality has always been considered the most risky, because in a way we have a 1-night lease with a guest or a 2-night lease as opposed to longer term leases. So there's all these analogies you can use. And hospitality is probably, from a standpoint of your revenue, it's very seasonal and and it fluctuates depending on where you are, where your customer base is coming from. So it's definitely probably the most challenging, but I also think it's the most interesting. But I also think it's probably the area where you can make the most money or have a bigger impact in your business model. So for example, if you buy an office building, you've got half of the building's empty and you're leasing it, you're working with the brokerage community, and you're doing showings, you're negotiating deals with tenants. It's a good business. It's interesting, but that's not an operating business. What's great about hospitality is you have all the same things that we do when we buy any real estate. We're looking at we're financing it. We're running valuations. We're doing physical inspections on the physical qualities or negatives of the building. But then after you do all that, then we have this operating business that sits on top. So for our house, we own and operate our own hotels. So we have an operating team and an ownership team, but we're really one company. So we all work together. But we really can impact our business in a much bigger way and better way than we can if we're in the office space business or the industrial business where we have leases that drive our revenue. So in the hospitality space, we are working every day on revenue strategies, cost containment strategies, marketing strategies. So if you were in my office and you heard me talking to my colleagues on the hospitality side, I mean, we're talking about, okay, we need to hire this person for this hotel. Why are our utility costs so high on this hotel? And how can we bring in more corporate business at this hotel? And it's a significantly more varied conversation than if you listen to my conversations with my office building managers and our leasing brokers. It's a much different play. So yeah, it's considered riskier, but for us, we feel that as a management team and an operating company, we can have a much, much bigger impact on the performance of our assets in hospitality than we can on any other asset class. As far as the market goes, we all took it on the chin pretty hard during COVID. We lost 99% of our business in our hotels within a few weeks, which is obviously much different than, a recessionary environment where we sort of see it coming and you can prepare for it. So this was like nothing I've ever seen before, in the hospitality space. It was devastating to our business, to our employees. And it's something that, we weren't prepared for because we didn't really have much notice, right? But I am bullish on hospitality. For our hotel portfolio, most of our hotels that we own are near major college campuses. So we benefit from the demands that come out of large state research, Division I athletic type of universities. And what we're seeing this year in 2022, we should exceed our performance in 2019. So if you go back to 2019, that was an excellent year for hospitality in general. Rates were really high, occupancies were high, business travel was good. And so the talk in hospitality is, when do we get back to 2019 results? For our company, because of the hotels that we own, we think we're going to get there this year. And that's going to be a lot sooner than a lot of other hotel sectors. So if you're in New York and you're betting on tourism for Broadway and international travel and business travel, you're probably not going to get there till 23 or 24. If you own drive-to resort like Miami, Southern California, even resorts up in New England, you're going to get there probably second half of 22 into 23. I mean, if you try to book a weekend in Vermont at a nice resort in July, sorry, it's already booked. So I was in Miami a few weeks ago for a conference. We couldn't find hotel rooms. We had to stay 40 minutes away. And this was midweek in March in Miami. Mm-hmm. So where's that demand coming from? It's not all business, right? People are looking for that drive to destination resort and flights now. Flights are easier. It's easy to get to Florida. Lots of flights from all over the country come to Florida. So I think you're going to see the drive to leisure, U.S. travel, U.S. leisure continue to do well. The lagger in hotels are going to be conference center hotels, big hotels with lots of conference and meeting space. That's probably a 24, in my opinion, 2024 comeback for those hotels.
Definitely. No. And you mentioned a variety of different, I guess, operating type of hotels, right? So you mentioned in your strategy, you're focused on the college market, it seems like. So is there a reason why you decided that being the case originally, or could you kind of elaborate a little bit on that? I think that'd be interesting to know.
Yeah, sure. So one of the biggest risks in hotels is, where do your customers come from, right? If your hotel's in downtown Philadelphia, you're betting on business, you're betting on conference, and you're betting on tourism, right? If you're in a suburban market outside of a major city, you may have a similar guest profile, but your actual customer base is going to come from a more varied channel, right? It's going to come from lots of different places. The reason people want to stay in your hotel is going to be based on its location and what's nearby and why are people coming to the area. When you own a hotel near a 50,000 student state university with research, development, graduate programs, medical, law, all those types of things, big universities like that create what we call reliable and consistent demand. So in good economies and bad economies, and take pandemics out of the mix for a second, but if you look back over the last 30 years pre-pandemic, those college calendars pretty much remain constant, whether we're in a recession or not a recession. It's good economy, bad economy. So what having hotels near major college campuses does for our business, it eliminates a significant amount of revenue risk and where those customers are coming from. 90% of the guests that come into our hotels are there because of that university. So if that university calendar stays the same, which it typically does, then we have a pretty good idea on where our customers are coming from, when they're showing up, and how much we can charge them. And so that really eliminates a lot of that risk. You don't get that in what I would call more traditional hotel markets. You just don't. You may have that parade every year. You might have different things that drive revenue for specific times of the year, but it's not as reliable and consistent as what we see in a major college university. And our hotels are all within walking distance to those campuses. So we have campus front, like beachfront, we have campus front properties. So, and when you look at that sort of niche opportunity, that takes a lot of the risk out of the business. And so we've been really successful in identifying assets in those markets and then developing or redeveloping assets that really meet the market. So that's why we picked university towns. We're sticking with that. We're raising new capital, and we're going to hopefully grow our portfolio. Now the pandemic's behind us, we should be growing that hopefully 3 or 4-fold over the next 4 or 5 years.
Amazing.
So I've got a lot of talk with people that actually are interested in investing in a hotel. And I know that you pointed out like location is one big aspect of that, but are there some other like common pitfalls that you really need to watch out for as an investor before you actually go through with purchasing? Can you give us a few?
Yeah. So obviously hotels are just like any other real estate. So location is going to be really important, right? What's going to bring people to my hotel? It's the same as why would someone want to put their office there? Why would they want to put their office in my building? Why would someone want to come shop at my shopping center? Or why would someone want to live in my apartment building? The fundamentals of that aren't different for hotels. A couple of things about hotels that you have to be careful about. They're very capital intensive businesses, much more than other asset classes. So you sign a lease with an office tenant for 5 years, you're doing some capital on the front end of that deal. And then pretty much you're really waiting for that tenant to either leave or renew, and you're doing a little bit more after that. Hotels need annual capital improvement budgets. So if you're going to invest in a hotel, make sure whoever you're investing with has sufficiently created reserve accounts and is reserving money, usually a percentage of gross revenue, and putting it away to replace furniture, carpet, lighting, equipment, and things like that. Busy hotels get a lot of wear and tear. So my first piece of advice would be make sure that if in your hotel budgets, your pro formas, you have operating reserves being put away every month based on revenue, because it's a much more capital intensive business than other real estate classes. And then secondly, really, really look at who's going to operate the hotel. Like I said earlier, it's an operating business. You've got to have a great management team, people that are focused on taking care of your guests and your customers, controlling expenses, maintaining your books and records. It's much, much different than office, retail, industrial, and multifamily. So make sure you have enough capital reserves and make sure you've got a really good operating team. And what we like to say about our business is we're owners and operators. So the ownership group and the management team is one company. Sometimes when you have an ownership group and they hire a third party manager, sometimes there's a little bit of a disconnect there. So if you're going to hire a third party hotel manager to manage the hotel for you, you're going to have to be really diligent and manage the manager really well.
Definitely. No, and that's a unique point that you mentioned. So is there, I guess, what's the thought process? So if I'm let's say I'm an investor and I've invested in several different types of commercial property, but now I'm looking to dive into the hospitality space to kind of capitalize on what we believe is going to be a bullish market for travel over the next several years. If I'm looking to buy a hotel and potentially I have the construction experience, but I don't necessarily have the operating experience, would you recommend someone to solicit the services of a third-party operator, or kind of take it upon themselves and say, okay, I'm going to hire someone who has experiences in the hotel management space and keep everything in-house? I guess what's the thought process there?
So I like the idea of bringing somebody on your team that has hotel experience, because now you've got that owner-operator model. So that's really good. I think that's much better. If that's not possible, and you've got a great, let's say, third-party manager in your market that you want to hire, then I would recommend two things. Either get them to make an investment with you, alongside you, so they've got some skin in the game with you as the owner. And if they've got some skin in the game as well as the manager, then you really align your interests well with them. If that's not possible, then there's ways to build a hotel management agreement that provides some incentives, right? You get a base fee, but if you exceed budget, either on the revenue side or the expense, or you beat expenses on the expense side, or our guest scores are better than we thought, and we're performing within our comp set, which I can talk about with our competing hotels, then you can create a management contract that gives them incentives to outperform, let's say, the base, what you think the hotel should perform at. So for example, you might say, okay, here's our budget. Our budget for 2022 is to make a $2 million net profit. And let's say they get a 2%, let's say they get a 3% management fee. Instead of paying them 3, you pay them 2 and say, we'll pay you 2, but for every dollar above 2 million, we're going to give you a bonus of 5% instead of 3%. So therefore, they know that if they work a little bit harder and focus a little bit more, and they achieve or exceed the budget expectations, then they're going to be compensated for achieving those, better than budget results. So we haven't done that because we own and operate our own hotels, but we do that with our staff sometimes. And we incentivize our general managers and our sales managers that way through results. But that could be a way to almost create a hybrid relationship between a hotel owner and a hotel management company. So that's something you can do.
Yeah, I love the incentive experience. And I mean, I feel like that works in any environment, regardless of, the industry. Incentives for performance incentivize people to try to exceed expectations. So that's awesome.
Yeah.
So one thing I wanted to talk about, and this is something that we've had other people on the podcast talk about, I'm very bullish. To give you a background on myself, I'm actually an engineer by trade. I was in technology for many years, about 5 years before I got into commercial real estate. And now with the advent of the blockchain, it's going to become very, a big deal going forward. I'm very bullish on the concept and the technology itself. So I kind of wanted to have you elaborate a little bit on that, because I know you are, an advocate for it, and you like to see, the adoption of it in a variety of different settings within the commercial real estate industry. So what are your thoughts on how the blockchain technology is going to affect the industry going forward?
Yeah, it's a great question. And there's very little right now as that industry sort of grows. The digital securities, crypto, that whole industry as it's growing today, understands one thing, that real estate is the biggest target opportunity for what they're doing. Real estate is the largest private asset in the world, trillions and trillions and trillions of dollars across the globe. And they recognize, as companies are building crypto-backed or crypto blockchain technology, asset-backed security tokens, they know that their number one target is commercial real estate. So therefore, there's a lot of talk in that business. So a couple things. One, I was a .com CEO back in the day. And so I learned a lot about real estate technology being a .com CEO. But what I also learned in that was the best technology for commercial real estate typically comes out of real estate companies and not out of pure tech plays. So as these companies are developing asset-based security token technology and platforms, we're hoping to see some real estate people that understand real estate involved with those technology companies, so that as they develop the tech, it actually works for our industry. The other thing that I would say is there's a difference between prop tech and digital assets. Prop tech is what we did back in .com days, and they're still doing it today, which is really technology that goes in buildings. to make either the owner experience better or the guest experience better. And the guest could be an office tenant, an apartment tenant, a retail tenant, or people that shop or go to a hotel. And that's typically, heating and lighting, heating and cooling controls, energy management, lighting, security, things that you see or interact with inside a building. What we're talking about for security tokens backed by real estate is really different than prop tech. It's a way that developers like myself, we have 3 private equity funds as well, are raising capital, managing investors, and ultimately, the ultimate goal is to bring liquidity to private real estate, which would be a seismic shift in commercial real estate. Right now, commercial real estate's illiquid. If you invest in it, you're kind of stuck with it. It's expensive to get into real estate. It's expensive to get out of real estate. And if we can change that dynamic with real estate, and this new technology can do that, boy, we're talking about big shifts in commercial real estate, not so much in the way we use real estate, but the way we invest in it, the way we trade it, and frankly, opening up private real estate to a lot more people than it is today. So there's a couple of things that are happening. So essentially what we're talking about is changing what's called either a LLC entity or a limited partnership, which hold private real estate assets, and converting that structure into essentially a liquid tradable asset. So imagine Bitcoin, right? Everybody knows what that is. Not many people understand it, including me. But we know that Bitcoin isn't really backed by anything real. It's entries in a distributed ledger, and we know there's a finite amount of it, right? But that's all we really know. Imagine a cryptocurrency like Bitcoin, but instead of it being backed by that, it's actually backed by a portfolio of real estate or a single asset or multiple assets. And the value of that security token or that cryptocurrency is based on the value of the real estate. Now you're talking about essentially moving private real estate out of an illiquid, limited sort of universe of investors into a much more viable, tradable asset where you could buy $50 or $100 of a real estate portfolio and hold it in your portfolio, just like you could buy $50 of Bitcoin. And we're seeing the technology it's built today. There are a few real estate assets that trade on what's called an ATS or an alternative trading system like Coinbase. And so you could buy today, if you had an account in one of these ATSs, you could buy shares in real estate through security tokens. Now, the trading's very light. There's not much of it. And there's not many assets that actually trade, but it's the beginning of what I call a phenomenon in our business. And I think within the next 2 or 3 years, you're going to see small companies like mine, big companies convert the way they raise capital, the way they manage their investors into essentially asset-backed security tokens. A security token's another name for a cryptocurrency in a sense, but it's a asset-backed class as opposed to being backed by something that's abstract. So what I'm doing with a partner company that we have is we're creating that ecosystem of technology that you're going to need in order for this to work. And then once that gets further along, and it works today, but it's still being refined, is that you'll see people tokenizing their real estate portfolios, creating tradable security tokens, and then you'll start seeing a market happen where these tokens can be traded and people can get in and out of private real estate funds. And I think that's probably where the opportunity is going to be, in a way, just like you can get in and out of a stock, like you might buy on Robinhood, and young folks are buying, stocks on Robinhood. A lot of young people have Coinbase accounts and they're trading in and out of cryptocurrencies. You're going to be able to do the same thing with private real estate assets represented by security tokens backed by those assets. So it's a really, really interesting industry that's really growing today, and it's going to have an enormous effect on the commercial real estate industry. It's almost hard for me to describe the impact it's going to have, but it's coming. We should all get ready for it, and we should all learn about it. We should educate ourselves. And in fact, I'm speaking at a lot of conferences coming up in April and May at traditional real estate conferences where I'm going to be talking about this. And my guess is I'm going to get a lot of questions. I'm going to get a lot of blank stares. Like, what is this guy talking about? But I'll tell you, when I speak to students on college campuses, which I do a lot of, the young people, their eyes light up, they sit up straight, their eyes open up wide, and they are intensely interested in this type of thing. So I think it's coming. I think we should get ready for it. The SEC and the IRS are catching up on regulations that's going to support this. So it's all happening, and it's happening pretty quickly.
That's awesome. Yeah, I know. And the tokenization piece is something that's super interesting, as you mentioned. And I remember reading an article, about 2 years ago or several years ago, where there was mentioning that I think the first tokenized project was, I believe, in Dubai or somewhere in the Middle East, and they had this massive hotel that you could buy like a square inch of this particular hotel for some ungodly figure. But as you said, as the years progress and the technology is refined and the cost to tokenize these assets are to begin to drop, you'll start seeing a lot more influx of capital into these projects. And like you said, the secondary market is really where the magic's going to happen. Like if you have an ability to be able to, invest in a project in Denver, for example, and it's, you have $1,000 and say, hey, I want to own a fractional percentage of whatever this project is. That's going to open up the doors, floodgates for people, because one of the biggest problems, like you said, with commercial real estate is the illiquidity and the access for a lot of people. Because who has $100,000 to go? You may, but a lot of people don't have, especially young people. They may not have $300,000 to go buy a commercial property, but they do have $1,000 that they can deploy into some other form of investment. So it's definitely an interesting project.
And they can move in and out of it, right? Mm-hmm. So we have real private real estate funds. If we get this done, and I have a $1 million investor in my fund. We have some of those, and they just decide that maybe they want to redeploy that capital. They can fractionalize their $1 million interest in my fund, sell 50% of their security tokens, which are backed by my portfolio of real estate, and then there'll be a buyer or multiple buyers for that bucket. And then that individual investor can use those proceeds somewhere else. Hopefully the token's appreciated in value, right? Hopefully the investor's gotten dividends, over their time with us. And if that works, boy, we've really, really, really changed this business significantly.
Absolutely.
Yeah. It's really exciting.
I know that you spoke several times about the enjoyment of speaking to younger kids, particularly college students. But my question would be, what advice would you give to your younger self if you could go back?
That's a really good question. I think the advice would be, don't be in such a rush. When I was young, I wanted to find success really quick. And one of the things I preach to students today is listen, you're coming out of college, you're young, you've got a really long career ahead of you. The most important thing that you gain over the your first few years of your career are experience, networking, learning how to work and be in a professional environment with your colleagues, people that are older than you, and then eventually younger than you. So I think if I could go back, I may have stuck with some of my early jobs longer and been a little bit more patient, and use those platforms to grow a little bit more wide instead of long. So that's the best advice I would give myself. And I think if I would have done that, I'm not sure. I always wanted to be an entrepreneur. I always wanted to run my own company and do my own thing. So I got to the point I wanted to get to, and I waited. I didn't start this company until I was about 40, which in the entrepreneurial world, that's a little bit old, when you see the ages of people who are starting companies. But that was the time that I felt ready to do it. I felt like I had enough experience. I felt like I had a network of people that would support me and that I could work with. And so I would say patience would be the thing that I would, hit myself over the head with when I was a younger person.
That's some great advice, really.
Great advice, yeah.
And similar to what you said, there's this book that I read back in the day. It's called The Compound Effect, and I keep harping on people when it pertains to this. And it's small, consistent, positive action added up over a relatively short period of time adds up to huge results. And that's the ideology, is like if you just do a few things every single day over many, many years, the results do come. And so you're right. I mean, and obviously when you're in that position, I mean, I was in college, 8 or so years ago, 9 years ago now, which is crazy to think. But at that time you think, oh my gosh, like I see all these people doing these crazy things. Like I want to be able to do that as well. But sometimes it's important to kind of pull back the reins and say, okay, what can I do to add value to the marketplace and find opportunities to be able to do that and grow your skills. And then once an opportunity presents itself, then you try to capitalize on it. But you're right. I think it is important for us to kind of step back every once in a while and think about, okay, what type of experiences am I really taking in?
Yeah, your best ideas are going to come from your work experience, right? You're going to be working at whatever you're doing. And hopefully, if you're thinking about what you're doing, you're going to find flaws in the things that you're doing. Saying, boy, what if I did it another way? I could really make this process more efficient. I could do it differently. I can do it better. That's how new businesses evolve, right? New businesses evolve because we're solving problems that exist that aren't being solved, right? So when someone can solve a problem or cure inefficiencies in a business, that's where new businesses come from. Where's the best place to see that? In a business where you're working. You know, so if you're in a business and you're performing whatever you're supposed to perform, and all you keep saying to yourself is, boy, why aren't we doing it this way? If we did it this way, we could do a lot better. That's your entrepreneurial brain figuring out ways to create opportunities. And so that's the best way to do it. That's how it came to me.
Yeah, no, I'm sure that's how it came to a lot of people. And that's some phenomenal advice. So one of the things we like to ask our guests is, we're all voracious readers. I'm a big reader. I know Jeff is as well. What we usually like to ask is, what is one of the most impactful books you've ever read? And it doesn't have to be real estate related. It can be really anything that you thought was just extremely impactful for your life.
Yeah, so there's two kinds of books that I like to read. One, I love to read biographies, especially about people that have been successful, but not so much successful in like climbing the corporate ladder. I love to read books about people that have done things that nobody else has done before. So I read a biography on Henry Ford. You know, he created the assembly line to build a car. Like, you know, wow, right? You know, so those are the kinds of books. I also, a while back, read Jack Welch's book when he was still running GE, and really obviously great book, but some really interesting insights. The one thing I always remember is, you know, GE would always fire the top 10% of their performers every year. But the reason they did it, and this always sticks with me, was they did it because, one, the bottom 10% weren't helping the company. But the reality is that by GE letting them go, they're giving that employee an opportunity to find a better place for them to work where they can be a top 10 performer. So in a way, they looked at it as, it's good for our company, and it's actually good for the individual because they're not performing well here. Let's give them the opportunity to find another opportunity where they can perform better. Maybe it's the environment, maybe it's the job. So I've always looked at that. And whenever I've had an employee situation where it hasn't worked out, I always look at it as a positive from a standpoint of, hopefully we're doing the company a favor by replacing that person with a higher performer, but we're also giving that person the opportunity to find another opportunity where they can perform better, make more money, get promotions and things like that. So those are the couple things I've taken out about it. The other kind of book that I really love, the other kind of books that I really like are sort of the social psychology books, Malcolm Gladwell, Freakonomics, and things like that. They make me think so much about things that I'm doing in my business that maybe I should do differently, or look for trends or ideas that I may have not thought about before. I remember when I read the first Freakonomics book, I was blown away by the things that they were writing about. I mean, the theories behind some of the things they talked about, a lot of them were controversial. A lot of them are political and socioeconomic, but it just made me think and look at things in a different way. Malcolm Gladwell has some great books. One in particular, one was called David and Goliath, which I thought was one of his best ones. And he talked about how Davids can beat Goliaths, right? How can a small company beat a big company? And why smaller companies can perform either at the same level as a larger company or even better. And he got into all those types of things on why that's possible. So as an entrepreneur and someone who runs a vertically integrated real estate company, you know, I remember I was reading the book and I would have to jot down notes as I was reading the book because I wanted to remember some of the things that he was talking about in that book. So those are the two things where I've learned the most from reading autobiographies about people that have done things that nobody's done before, and some of these social experiment type books that look at things differently and come up with new conclusions. It's really, really interesting.
Amazing. Yeah. And the book you're referencing, Winning by Jack Welch, it's a phenomenal book. That was one of the first books I read during college. I actually had a really good friend of mine recommend the book, and yeah, it's an amazing book. And similar to what you were mentioning before, like we all have different skills, right? You know, there's certain things that you're really good at, and there's probably certain things that you're really not good at, and vice versa. The same for me. So if you put me in a position that is not pertaining to my skills, then obviously I may not perform at the level at which I'm performing at, or I'm expected to perform at, or trying to exceed expectations. And so, like you said, it may be better sometimes to cut your losses and say, okay, well, you know, this is not working out for either party. Let me see if there's another opportunity for me to perform well elsewhere. And, you know, there's been many times in my life where I've faced that, where I've been in the situation where it just wasn't playing well to my skills. And, you know, I had to transition to to something else. And so, you know, I think there's a kernel of truth there. Sometimes it hurts because, you know, it's hard to disassociate, you know, your personal feelings with that form of rejection, but a lot of times it's for the best. And ultimately, hopefully it becomes the best for both parties involved. So.
Yeah, I mean, none of us are good at everything. Even if you're considered a, you know, sort of a jack of all trades, you know, there's going to be something that you perform well at, and that gets back to very fundamental business functions of surround yourself with people that complement your skills. The other thing that we do in our company, we have no holds barred meetings. So you know, we really get into it with each other in a professional way. Yep. But yeah, we're critical of each other. We argue in a good way. And I will tell you, some of the best ideas and best strategies and the best solutions to problems have come out of disagreement. And we foster that here in our company. And I wish others would do that as well. You know, everyone's so concerned about being, and I'm not talking about political issues. I'm not talking about socialists. I'm talking about our business problems and things that we deal with in our business. Disagreement, alternative ideas, new ideas, you know, that type of conversation, and sometimes it gets a little bit heated, usually creates great solutions, great outcomes.
And disassociating yourself from the idea that you create, because that's the hardest thing sometimes for people, is that you think, oh, it's my idea, so by you attacking my idea, it's an attack on myself personally. It's not. And that's what I think a lot of people, you know, when you foster that type of discussion or dialogue, ultimately people start realizing, okay, well, you know, if I throw out an idea and it sucks, it's like, it's not a problem. It's great that we're encouraging you to keep coming up with ideas, because the next idea may be the one that actually is the winner. So that's
exactly. And it really rings true in real estate, commercial real estate, with the business that we're in, because you really have two businesses. You have the financial side, the investment management side. Then we've got the physical side, right? We've got to take care of a physical asset. That means the roof's going to leak, the air conditioning is not going to work, the elevator is going to break down. We're going to have unhappy customers, and the question is, it's we know it's going to happen, right? We wish it didn't, but we know it is. And the question is, how do we react to it, right? And that's really where we see sort of the effects of our performance and our reactions to those standards. You know, I wish our elevators never broke. I wish the roof never leaked, but it's going to happen. And the question is, are we prepared for it? And do we have the temperament to deal with it? And if you're going to be in the real estate business, you better have the right temperament, because whether you have a duplex and you have, you know, 4 apartments, 3 of those tenants are going to be happy. And frankly, they're happy regardless. There's going to be that one tenant that, regardless of what you do, you're never going to make them happy. But you're just not. And so the right temperament, the right strategy is going to be really important. And in the real estate space, it's even more important.
Definitely.
I think.
I always like the book that I always like to recommend, on especially with people and companies and managing other people, is to invest in your employees and get strength finders, and have them read that and even take the test and try to figure out exactly what their strengths are. Because most people, let's be honest, they don't know what their exact strengths are. They know a lot of their weaknesses, but they don't know their strengths. So that's the one that I definitely like to recommend for people. So. And
disc too is super helpful too. I found that, especially personality types for different roles, like, you know, understanding that if your temperament is this way, maybe these type of roles are better for what you were trying to do. So good advice.
Yeah, I agree with that. We've definitely had to move some people around, especially in our hotels. You know, someone that's in sales, but maybe shouldn't be in sales. So, you know, those types of personalities are easier to identify. especially when they're front facing, right? With our lenders, our investors, our customers. Those are different perspectives than if you're a property accountant and you're doing sort of your own thing, right?
Definitely.
So.
Well, Gary, to start the round out process here, we greatly appreciate all of your value that you've given us. I know the listeners are going to bring home all the value as well. But one of the questions that we always ask is, we have a commercial real estate treasure chest, which is a repository of things that we've collected from all of our speakers that came onto the show. And it can be like a PDF of something that you do, like a worksheet on hospitality, of how maybe even a hotel analyzation sheet or anything along those lines. And our ask is, what are you willing to contribute to the treasure chest?
Yeah, absolutely. And what I think would be really interesting, I have last September of 21, I spoke at a real estate technology conference, and it was about security tokens, crypto, the stuff we talked about earlier. But my audience was a technology audience. And so they asked me to speak about the real estate industry, but my audience were technology people. So I put together, it's like 7 or 8 slides. It's my presentation that I gave. And I tried to, in a way, sort of, I hate to use the word dumb down because that's not proper, but it was sort of real estate 101 for technology people. And so my goal was to explain to them that as they think about technology and building technology and where the opportunities for them in the real estate space was, I tried to show them the connection between traditional real estate and some of this burgeoning technology. So I would love to share that presentation with your audience, and they can page through it. And if this is a real estate audience, which I think it is, I think the technology is also fairly basic in the way I presented it. So I think if anyone's interested in security tokens, asset-backed digital assets, this could be a really nice introductory sort of view of it, because it's sort of a very basic presentation.
That's definitely a definitely value add that would be given. So we really appreciate that.
Yeah, I'll send it to you.
Sure. No, that's great. No, and we will make that available to you guys on the treasure chest as well. So if you guys were watching this in a YouTube format or anything, it'll be in the description. And same with if you're listening to this in Apple Podcasts, it'll be in the description as well. So Gary, we just greatly appreciate your time. If someone wanted to get in contact with you, whether they wanted to invest with you or learn more about what you guys do on a day-to-day basis, how would you encourage them to reach out?
Yeah, so I'm on LinkedIn. So you can just punch me into the search bar on LinkedIn. You can find me there. And then, we have a lot of different operating companies. So we have various websites. If you just Google my name, you'll probably find our real estate investment management website, which is Real Estate Capital Management. And then we have our hotel company called Scholar Hotel Group, which is scholarhotels.com. So I'm all over the internet with Google and LinkedIn. So that's probably the best way.
That's awesome. No, and what we'll do as well is we'll be including all that information in the description below. So if you guys are watching this in a YouTube format, it'll be in the description. And if you guys listen to this in Apple Podcasts, Spotify, etc., it'll be in the description as well. So again, Gary, thank you so much for your time. We greatly appreciate what you do in the space and the knowledge that you were able to provide to our audience. If you guys are watching this on YouTube, we would greatly appreciate if you can like and subscribe to the channel. It really helps with the YouTube algorithm, ensures more and more people can hear this message. If you guys are listening to this in an Apple Podcast format or Spotify, we would greatly appreciate a 5-star review. We've seen a significant uptick in our downloads as a result of you guys engaging with the podcast and leaving reviews. So we greatly appreciate your support, and we'll see you all next time.
Thank you.